Welcome to FX Signal Team. Today, we are going to start 14th and last chapter of Part 2. The main topic of this chapter is conclusion, tips and final thoughts. Let's start. You have made it to the end of the theory or instructional portion of the course. However, this is actually just the beginning of your trading career. After finishing this course, the real work begins. You have probably just spent several days or weeks reading through this price action trading course. You have seen the various concepts I put forward. I have disclosed my trading mindset, all my wisdom and knowledge. You know all my tools, all my price action entry methods, etc. You should understand the basics of price dynamics, trends, the way we find trends, the way we trade price patterns within trends, etc. Regardless of what methods you liked, I want you to pick a few and master them. A novice could start with trend following approaches and use price action signals to enter intraday or from daily charts. Now that you have this information, what are you going to do with it? If you want to keep studying it, go ahead. If you want to trade with it, you need to put a trading plan together and do it. Your trading plan will revolve around how much you risk per trade, your desired risk reward per trade, and of course maintaining the discipline to enter the setups you choose. Daily charts are a good place to start. I still focus most of my attention on the daily chart time frame. Daily and 4-hour are my favorites. Naturally, some of you will still be confused or unclear about some topics, so reread the course and watch the videos and look at your own charts. Everything will come together if you follow just one or two setups that you feel most comfortable with. Personally, I love trends, and I use all my time to find setups in trends with my fakie, pin bar and inside bar entries. I master these only. You have learned multiple trading setups or strategies in this material. Honestly, you need to find a few, not just one, but not all of them. Use the ones that fit or mixing well with your personality and fit into your time restrictions. For example, pin bars on the daily chart time frame with a trend would be one strategy to look for. Pin bars on the 4-hour chart time frame with daily trend is another example. When you combine the different setups you have been taught in this course with the various time frames taught and market conditions, there are a number of different strategies or setups you can focus in on. Discretion and gut feel. Discretion is defined as the freedom to decide what should be done in a particular situation. In price action trading, you will need to use discretion when deciding which trades to take and which to ignore, as well as in your exits. You will have a trading plan, but it will be more of a guide and a checklist to remind you of your strategy and keep you on track than a rigid set of rules. The best traders in the world get to that point by using discretion and having a good gut feel for when to trade and when not to, and when to increase their risk and when to back. This is something that cannot really be taught, it must be developed through time and experience. What you have learned in this course is an excellent starting point, and I hope it has built a solid foundation under you to get your trading career started on the right track. But it is not the be-all and end-all. You will be learning and growing as a trader as long as you trade, so you need to learn to enjoy the journey and process. The theory you have learned in this course is effective and critical to your development as a price action trader, but understand that there are exceptions to the theory and things are not always going to be black and white as you trade in the real world. The exception is usually going to be an individual price action signal. You have learned the theory. For example, look for buy signals in an uptrend. If you get a strong sell signal in an uptrend, there's a potential trade there, and this is where your screen time and experience is going to have to come into play. Do I take the sell signal against the trend or not? A price action signal is a strong indicator of potential future price direction, and so it cannot be ignored. The point is, all theory in the world cannot teach you gut feel. This is developed over time, using the theory you learned in this course as a starting point and screen time or experience as the developer of the gut feel. At the end of the day, every trade and every decision you make is a result of your decision making. You are the final filter for your trading. You have to turn yourself into an effective filter by executing with discipline and not becoming emotional, as we've discussed in previous chapters. You will also become an effective trading filter by simply analyzing charts and price action, and getting in screen time. I have been looking at the charts almost every day for about the last 14 years, and it never gets old. I never get tired of it. I suspect I will be looking at charts the day that I die. You really have to have this passion and commitment if you want to become a professional trader. There is no in-between to become a successful trader. You have to make the commitment and feel the excitement. I'm not saying you have to dedicate large amounts of time each day. I'm saying you have to have passion and be genuinely interested in trading and markets, or you won't make it. Live with the consequences of your trades, and try not to let them affect you too much, or it will be your downfall. Remember, no one else but you is responsible for your trading failures and successes. When you start trading better and start seeing success and profits add up, do not become arrogant or cocky, as this will quickly lead to overtrading and your profits will disappear. Keep your trading success to yourself and let it build a quiet sense of self-confidence and achievement, for this is something that no one can ever take away from you. The true professionals and successful people in the world do not brag about their success, or let it go to their head too much. They do not need to brag because their success speaks for itself. Tips. Each day when I wake up, I scan through my favorite currency pairs. I identify any obvious price action signals such as an inside bar, a pin bar, or a fakey setup. I will have already had key support and resistance marked on my charts, but I will then amend these lines on the charts if things have changed overnight. A move in the markets will obviously change my key short-term swing support and resistance, so I note those levels clearly. I take note of the current short-term trend on the 8 and 21-day EMA, and look at the price action as well, to determine whether the market is trending or consolidating or range-bound. If I spot inside bar formations with the trend, I look for continuations, but if it has broken against the daily chart trend, I note a potential fakie is in the making. Remember, the fakie setup is unconfirmed at this point, so that's a pending trigger I note. After a daily pin bar, I sometimes will wait for a 38 to 55% retrace of the pin bar to enter. If the market is trending, certainly I try to take daily pin bars instantly, if the trend was already strong and moving fast. I bring it all together and decide what setups I like. I decide if the market is in a trend, following moving averages, or nearing obvious short-term or long-term horizontal support and resistance, etc. Do any signals occur near the relevant areas, or did they form with the broader trend? If the market was previously going sideways, was there any obvious intraday trend move that broke a key support or resistance level overnight? If there was, I need to note that level on my chart. Most fakie setups work best with trending markets, or right next to support or resistance, or key retracement points, so the trigger is only taken if I can clearly decipher this. Daily inside bars are taken if they clearly form with an existing strong trend. When I take an inside bar breakout, ideally I want the inside bar to have been the tightest bar of the last 4 or even 7 days. The less nearby resistance or support, the more potential the inside bar pattern has to move in our favor. If there is a nearby key level, you might want to wait for support or resistance to break before entering inside bar. Daily inside bars are noted regardless because they can become a fakie setup. If there is a strong trend on the daily chart, with a clear stepping price action in one's direction, I will be actively looking to enter a trade in the direction of that trend, using a counter-trend move to enter at the 8 or 21-day EMA value areas. This applies to the hourly trend charts as well. Daily pin bar with an inside bar after it is powerful, and the trigger is usually taken every time if the trend agrees, or if the signal occurs at or near a very obvious significant key horizontal level. Remember, as price action traders, we use New York close charts. My final thoughts. Regardless of stop-loss order placement and target profit order placement, if you learn to master just several price action strategies and have these basic conditions present on the charts, you are well on your way. Your edge is price action. Learn to read charts and keep a lookout for key levels, pin bars, inside bars, and false breaks. Over time, you will develop into a good trader by applying your own money management, stop levels, and target levels. I cannot give you those levels, because the market is always changing. I have given you the signals that work for me. Now you must learn to look for them and manage your trades how you feel comfortable. I will say it again, there is no system or correct method to enter and exit. The only systematic part of my trading is the price action entry trigger itself. Once I see the entry conditions, I look for logical stop placement and target placement, and if I apply a risk reward of 1, 2 or greater, my account profits tend to take care of themselves. Remember, markets can only move by a certain % per week, so if your stop is wide, your profit target will also be wider, and you're looking at a time horizon of a days to weeks. Remain patient and don't stuff around with a trade setup once it is on. The course content is a work in progress, and you will get 10 times the value of what you have paid for. It takes time to put this content together, and this new version of the course has literally taken months to complete. Best of luck in your trading and future. Our next chapter will be trading plan example or template.